Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 5th of October 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, tough week all round. We have a very messy and nervous market that has been taking a turn for the worst, just below some major highs, especially in the overseas markets and our market as well. It's been somewhat of a crunching week. We can't make happen what's not going to happen, so don't try and do that. We just have to be patient until the market creates more surety and then more prospects. Okay, frustrating I know, but for now we deal with that and we run with with what we have at the moment. Okay, there's nothing sacred. As the recent run by insurers and builders comes to a speedy end, it's becoming an uncomfortable situation with macro temperatures overriding the micro state of stocks. Leaders are getting smacked. Mid caps and small caps are faring a little better. BHP and CBA hold well, but most stocks are retreating from significant highs and trend reversal levels. If you're looking for stocks, be careful now. Better to save your capital than throw it at a whim. So it really is a risk-on stage at the moment. We're very wary of what's happening out there. Stock picks have been in decline for a long time. We've had those big stocks holding up the market, and we're now seeing the overseas markets take a little bit of a dip. So let's just get into the first of the top 10 ratings this week. They will have changed a bit because we've had a bit of a suffering week, but we've got Paladin at the top there. Pro Medicus still doing okay. Seven Group, which has come back a bit this week. Aristocrats holding. Cars come back. QBs come back. Wally's doing okay. Cochlear, CSR, GMG are all also under pressure this week. So it's difficult. We'll see what happens by the end of the week. But let's go and have a look at the US markets to start with. And first off, we get to look at the Dow. And it's pretty clear now what we've got here. We've seen a fairly big breakdown of this uptrend here. It's tried and failed at these highs up here. This is really now a sweeping fall. Tonight seems like last night seems like a little bit of a pause as the pressure is certainly down at the moment. Interest rates are scary for stock markets and nobody can really decide what's going on there yet, but I think they're a bit wary about the upside at the moment. So that's the Dow. It certainly looked to correct. We've got levels down here, 31,820 and 28,700 to look for any move down there. The S&P is similar. It's had a little bit of a breakdown as well. Lower high, lower low. We've broken the trend line. We've broken the moving average. Volume is bigger. This is sagging quite a lot. It hasn't gone to zero yet. But still, on a weight of evidence, we're looking at this market going down further, and the pressure seems to be on the downside still now. So the Nasdaq faring a little better. It's still holding up a little bit above support. We've got a lower high here, a slightly lower low. It hasn't broken the average or trend line yet, so we're not too bad. Selling hasn't been abundant there, so the tech sector seems to be a little bit more robust than the rest of the industrial sector at the moment. So this market is holding up. Then we've got commodities. Well, commodities aren't doing too well, and they haven't been doing too well for a while, apart from oil. So copper continues its route down. Lots of low highs here, lower highs. It keeps trying to rally and failing, and we've got a big failure this week, although it hasn't finished this week. It's looking like it's closing below a series of lows that goes back to about May this year. Okay, so that's copper, still weak, still downtrending, and we've had this situation's finally been resolved with gold. We've seen a big fall off the cliff here, some volumes hit there, momentum's came back to zero. So this market probably is going to come back towards your 1650 level on a US basis, which is a trading range we've been stuck in for quite a few years. So for the moment, gold seems weak. Crude sort of tapered off a little bit this week, or the last couple of weeks, but the trend, the reversal trend still seems valid here. It's broken these highs, it's above the average. We've now seen some selling pressure come in here, so this is now the testing stage. Usually when we get that first rally and first reversal point, the sellers will try it on, and they're trying it on at the moment. Now we've got to see if the buyers can hold this reversal and continue an uptrend. So that's sort of what happens with the buyer-sellers at the moment. These sellers are really challenging these buyers to say, okay, if you really want to turn, come and buy us, and we'll give up and go away, then we'll let a trend go higher. But so for the moment, it's an interesting situation, Brent Crude, but we'll certainly keep a close eye on that for you each week, as I normally do. Okay, then the ASX 200, we're a favourite little market, and we've got here this huge trading range, the all-time highs here, June, October lows back down here at 6474. February highs back up here near seven, just above 7,000, 7,500. And now we've got a little bit of weakness here this week. We haven't broken down yet this week below S1, but if we do tend to, then we're probably going back to S2 around 6,500, something like that. So all's not looking good. The momentum indicator is flat there, so that's really where we're at. With the ASX 200, the pressure is down at the moment, and we can see that across the board pretty well. And there's still a few stocks popping up, but not a lot at the moment. Okay, so let's just now have a look at the stock pick count. That really is down another 2 this week to 31 of 184. So no change in the number of stock picks. They're still at 25 of 161, but we've lost a couple of ETFs there. So they're down to 6 to 23. Mainly those index ETFs, which have been running for a while and now tapering off, and time to have a little bit of rest there for the moment. So that's what the stock pick update looks like. It's not all that flash and hasn't been for a while. That's why we've just been focusing on those few stock picks we have, and that's it. And still keeps our portfolios okay, although they are under pressure at the moment for sure, no doubt. Our conservatives is at 5 out of 10, so it's 50% equities cash. It's doing okay. The Energizer 5 stock, the long-term one, is still 5 out of 5, so 100% equities. The Energizer 10 is 7 out of 10, and the other two Energizers are 5 out of 5, and they're just sort of marking time. Not much happening there, unfortunately, at the moment. But we just have to live through these times, because this is what happens in the market. So you can't go and try and do something. Just perhaps stand back, make sure your positions are right, and let this all pass, because it will pass, and things will develop. Develop much better soon. So that's the situation there. Okay, so now what I want to probably do is get into some stocks for you. Not a lot this week, so I don't want to sort of paint a picture of things that are there that aren't there. So I'm going to be fairly brutal today. We'll firstly have a look at Paladin, which is one of the sectors. The uranium sector, Paladin, Deep Yellow, Boss Energy, Bannerman Energy. They're all having a bit of a rally at the moment. Where it goes, we don't know. Now, what we do know is that some of these rallies beforehand, meteorically, I mean, if you look at Paladin here, which I've got here, it went from 3 cents to about $1 in fairly quick time. So that was in a couple of years. So stocks can do this sort of stuff. So, excuse me, although we think the price might be high at the moment, it is high, but these things can happen. So that's an enormous percentage increase. If you put that in perspective here, or you can run your numbers over that, $1 becomes a lot more. And it can happen. So we're always a little bit funny at these levels. It's at highs, and we've got to get used to these high levels. But as I said before, these moves happen. And this was a very, very steady ride for Paladin. Went from March 20 to October 21. So really only 18 months it took to do that. So all those stocks there are in there. They're momentum stocks to ride. It doesn't mean it's going to happen like that. We've also got to be careful that it might do that sort of thing. So we've got to get out if our stops are hit. So we make the play. If you want to have a go at some stocks, uranium stocks are having a go at the moment, but make sure you work with your stops and be very careful. For those interested, I did a review of Bannerman in the newsletter this week, which is out early this week, so you can have a look at that. Okay, so that's Paladin at the moment. You can see here it's up to the highs. It's broken up here. It's got a trend intensity rating of 10 as at the end of last week. It'll probably come back a bit this week maybe. But the volume here is beautiful. Momentum is beautiful. It's above the average. And we've had a really nice sort of turnaround here, and now we're getting a new high. So that's really good for Paladin. I like the look of that very much. Be wary of the volatility, okay? Okay, now just want to go through a couple of leaders here, which have not been our friends, of course. And we're now seeing CSL again, now coming back to the low of this trading range here, down around 240. There's plenty of volume here, so it's going to give it a good test here. Now, of course, none of us think it's going to break, but it could. So we just got to be very careful about this, about being too keen about buying stocks that are falling. CSL is a very good stock. If you take a long-term view, maybe, but for the shorter term, we've got a fairly punchy move down here, and we've got some pretty hefty volume. So it certainly could go through S1 without much problem at all. So just be a little bit careful there on that one there. And I'm finding also that, I'm just going to go through the health stocks now. Really, we're looking at a fantastic stock, Sonic Health, but its highs are 46. The recent highs are 36. It tried to rally. It's now down to 28. And the volume is huge. So it certainly could break below S1. It certainly could come back to $22 without much trouble at all. So for those that are looking to get into this sector, okay, but whenever I look at these sorts of stocks like this is coming down. This is a falling knife. What I need to see is I need to see price stabilisation and I need to see volume. If I see that, then I can consider it. But for the moment, this isn't happening on pretty well any of these stocks. So I'd be very, very wary about any of these health stocks. The demographic is fantastic, but the prices are bad. And we've seen what's happened with ResMed lately. Its trend intensity rating is -9. Rarely will a stock recover quickly from such a fall. I mean, this is a big dent to investor sentiment and investor confidence. So these stocks take time to recover. We did have like a 1 week reversal week last week on some good volume, good sign, but that's something to build on. But for the moment, we still have this huge fall, $40 now down to 20. So it's nearly drops 50% ResMed, and it's really not looking very, very good at all. So there's 3 health stocks there that I'm a little bit worried about. But then again, just as typical of this market, we turn the coin to Cochlear, and Cochlear's actually making new highs. Now, go figure, but that's what's happening. So I guess you've really got to look at your stock's individuality at the moment, always. It's not always a one size fits all type thing. So Cochlear has made a new high. It certainly has come back, but now we're looking to come back to this R1 level, which should now provide with some support here. This is a weekly all-time high. This is where I'll be looking for some support. This is around where my stop loss will be. If it goes below there, I will not like it at all. But for the moment, we hold this. We've had a good rally. It's a reasonable volume there. On the upside there, we're certainly getting some selling pressure at the moment because the market is weak, but it ain't over yet, and I prefer to let my stop loss make the decision for me rather than saying, well, I'm going to get out, I'm a bit nervous or whatever, because the stock will turn around and go back up again. So that's Cochlear, and it's an interesting stock, I think. When you look at the health sector, there's a lot of turbulence there. You've just got to be very careful despite the quality of CSL, ResMed and Sonic Health, and I know there's been so many reports out of ResMed, fantastic stock, but at the moment, the price is going down, and the price does never lie, and that's what we've got to follow. So we wait for ResMed to get a lot lower, and then possibly when we see some support, then we can buy it at a lot cheaper price rather than doing it now on a whim. Okay, so that's the health stocks. That's my bit on the health stocks. Just want to go through a couple of leaders for you that are holding okay. Wesfarmers is holding quite well. I'm quite surprised actually because it was struggling on the upside, but it has made a bit of a break here. And it just has come back a little bit. Volume hasn't been great. It's all these indicators are positive. The trend intensity is rating is 8 for Wesfarmers, so it looks pretty good to me at the moment. And again, now some stocks will do it, some stocks will go with the market. At the moment, Wesfarmers looks showing a bit of independent strength, which is what I like to see. Commonwealth Bank. Not such a good week this week, maybe, but really in the scheme of things, it really has been going sideways, and it's not far from its all-time high at $110. So at $98, it's not that far away, and it could easily get there pretty quickly. But for the moment, we can see this chopping about. Volumes, is mixed. Momentum is neutral. It's just going sideways, and I think this is part of the reason the ASX is a lot higher because of these CBA and BSP I'm going to show in a second. If it was more of a weighted index rather than a market capitalisation index, it would be an awful lot lower, the ASX 200, but it's not because these high cap stocks hold it up. Okay, so Commonwealth Bank is one of those culprits. Trend intensity rating is -5 for Commonwealth Bank, but it certainly seems to be a little bit stable, which is good. Okay, we go to BHP again. I've looked at this stock a couple of times recently for you, and we've got this area here which is still holding. It has held since March this year at about $43. Unfortunately, the rallies keep getting lower, so we're getting squeezed here a little bit, but it is holding. And that's a good sign in this market. So we're all okay, which is not big thing for BHP. Copper's not so good. Iron ore's been pretty flat, so it's holding okay in the scheme of things. I think trend intensity rating is just slipped out of the neutral zone to -4, but I still look okay. Watch this support here. Watch this. This support here at 43 and the trend line through here, that's a fairly significant area there. And we've got 3 touches on this line, so it's not a bad line, it's quite a valid one. A 2-point line is not much good. A 4-point line is a lot better. So that's how you sort of look at those sort of trend line things and the emphasis you play on them. So there's not a lot of volume. If I just squeeze out the volume here a little bit for you, you can see a bit of selling pressure appearing here, but it hasn't really been that decisive either way on BHP. So I like the look of that sort of stock at the moment. Okay, and the other one we want to have a look on the leaders, which is one of the big leaders, which has not fared so well. And we did have a shot at this one a while ago when it made a new high, which is what we do. We did exactly the right thing, exactly what we should have done. And we saw a new high up here. Let me just blow this up a little bit more for you. So we saw this high up here, which we took, and then for some reason the sellers just bang, bang, bang for a couple of months there. They just wore away the buyers, and eventually our stop went off, and now we've sent it back down to 378, and some fairly heavy selling gone through here. And momentum, well, it's dead. Or it's down. It's down for the moment. So Telstra's not looking so good. Was looking quite good for a while. It broke out of this trading range. It went for a little choppy run, and then the sellers just came back and whacked this one. And unfortunately, trend intensity rating for Telstra is now -8. So that's not so good for Telstra. So you can see the market is in a funny spot at the moment, and we're finding difficulty to find out good stocks. So really, I've got no trend reversals on at the moment. There's nothing there at the moment. Any trend reversals that were prospects like Seek, ARB, Lendlease, NEC are all coming off again. So they're all being put on the back burner for the moment. I do have some current trend reversals on my list at the moment. Some are doing okay, some are struggling, but we just keep an eye on our stops, and we get out of them when we need to do. News highs are also a little bit different. A lot of stocks are shying away from those new highs. Stocks that were moving towards them, APE, NXT, all those sorts of stocks have all come back a little bit. So we just have to wait a little bit longer. But there is one little stock I want to talk to you a little bit about today, which has been doing pretty well. It's a reasonably new listing. On the market, it's increased its market cap. You can see the rally there, which increases its market cap. So it's now into the ASX 200, joining, I think it's the health sector, yeah, pharmaceuticals, or probably it would be. And so it's done pretty well. Now, again, if we look at this chart here, forget about what's going on around you, look at the chart. We can see here we saw an impulse move up through here, a very sharp move from $6 up to about 12. It's come back to about 10, chopped around a bit, and it's now starting to impulse up a little bit. Now, we've got to get it through these highs at R1 yet to confirm this, but the volume has been pretty good. Momentum, although it's come off a little bit because this was a pretty sharp rise here that kicked it quite higher, it's still quite high on the scale, which I quite like. So this is one I'm watching, one of the few that I'm watching, because there's not a lot. But I just sort of show this one. It is interesting. It is a pharmaceutical stock. I know the leaders aren't doing too well, but it's certainly worth watching because there's always one or two stocks that just do their own thing. And this one, Telix Pharmaceuticals, may be one of those. Okay, so that's all the stocks I've got for you today. I hope that puts you in the picture of what I'm feeling and how I'm thinking at the moment, or what the charts are showing. I just really truly try and report what they say, not what I think they're going to do. So that's what we try and give to you. We work in the present. We don't work in the future. We work in the past. We work in the now, and that's what we try and do with our charts. Okay, so now I want to go through. Been going through the last few weeks. Of trend intensity, the TI trend intensity rating, talking about why I designed it, how it's built, how and what the purpose is. It's a unique tool that provides perspective and takes the emotion out. And so I've been talking about the elements or the components of the trend intensity indicator: the price, volume, moving average, and MACD. I've gone through price and moving average the last couple of weeks. This week I want to go through how I look at the moving average. It's a simple input for each of these things. Volume, as I said before last week, it has 4 possible states, and I give each one a value, and only one can be true at any one time. Same thing with the moving average. There are 4 states. I have the moving average as you can see down here. If I look at number 1, prices are broken above the moving average. It's broken above the moving average for 1 week. I give it a value. If it breaks above to 2 weeks or more, it gets a stronger value. Okay, same on the downside. Okay, so if it breaks down below the average, it gets a minus. It gets a 1 value. If it breaks down there, it gets a little bit of an extra value. Okay, so they're the 4 states of the price and the moving average. I use an exponential moving average. It responds to the latest prices more. I quite like that. I use a 28 period exponential moving average, exactly the same as I use on volume. They all work together. They all complement each other. I don't get conflicting pictures. I get confirming pictures, because that's what I like to do, and that's what the process was when I built the index, built the indicator. So that's the moving average. So the value gets inserted into the 2-hour. Only one of those 4 elements can be true, and that one value gets input into the TR or weighted into the TIR. Okay, the trend intensity indicator to give us our end value. Okay. So that's the moving average this week. It's a very, very simple thing that I do, but it's how I combine it all and get that weight of evidence is really important. But it is a very simple and common sense sort of process. Okay. So next week, what I'm going to do is I'm going to go through momentum. There's actually 6 different states for momentum, which is quite a lot actually, but only one can be true at any one time, and I'll talk about that a bit next week. Okay, so that's really all I've got for you today. the market is a really strange market at the moment. Don't throw away your money, conserve your money, make sure you keep it safe, because that's the time we're in at the moment. I know it's been a frustrating time, probably for the last 2 years. I think if you go back to February 2020, we are probably about at the same spot as we are now in October 2023. So that's 3 years of zippo, maybe a bit of dividend growth, but that's about all. So that's the state of the market, but we do know the market goes up over time. This is a long period of consolidation, and hopefully we'll break to the upside, which is inevitably what the stock market will do. Okay, so that's all I got for you this week. I hope you're enjoying the sunshine in Melbourne like I am. It's one of our rare days. But be careful out there in the stock market. Ensure you stay safe, respect your trends and heed your stops all the time. Okay, and I'll see you all next week for hopefully some more interesting insights. Okay, thanks very much.